Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharan.
Greetings, programs. I am Jay Goldberg.
So this week we had a milestone that I think everybody roughly saw coming. Post the 10-1 stock split of Nvidia, and this probably would have happened anyway, to be honest with you. They very briefly took over the top spot as the most valuable company in the world by market cap, surpassing Apple, who briefly surpassed Microsoft last week, and held that spot for a little bit. My guess is this is going to be a continuing jockeying between Apple, Microsoft, and Nvidia as this top spot. So relevance as it may, but we're marking the moment that Nvidia is not the first semiconductor company to be the most valued. Intel had that briefly. However, no semiconductor company has ever hit this number of valuation before. So there is a first for that. So I'll lob that out of this moment for your thoughts, Jay.
Yeah, I mean, on the one hand, it's kind of just symbolic. Like these are all just numbers, and right. But on the other hand, like it's $3 trillion, like you said, is a lot of money. I think the really like jaw-dropping part about this is that the company was worth a tenth of what it was 2 years ago. I'm just looking at the chart. I mean, if you look at the chart of Nvidia, it is pretty much like hyperbolic, like just straight up like hockey stick, like everybody dreams about in the stock market. Only this is, going from 100 billion to a trillion to 3 trillion in a really short time span. So part of me is just kind of in awe of that. And you got to acknowledge it. On the other hand, like I'm trying not to make too much of the fact that like who's the most like that.
Yeah.
That to me is that's I think for me a bigger milestone was when was it? It was probably less than a year ago where they overtook Intel in market cap.
Right.
But that to me was like a more significant one, um, because at this the problem of course is at this level and with the stock. I mean, their stock chart looks like what the 1990s internet bubble Nasdaq looked like, just boom, like a mountain peak, like a volcano erupting out of the surface, and it makes me a little nervous how quickly it went up because the market gives and the market takes away. So I think being in such a big focus is like I complain about this a lot on here is like the dynamics of the stock are disconnected from the dynamics of the company itself, and so personally I'm a little bit nervous. I would be a little bit nervous at this valuation, this much attention.
Totally, totally. And we've talked about it before, right? That this opens up meme stock dynamics. There's all sorts of stuff that comes into it. So be that as it may, it again though is still sort of telling of the perception, which in this case perception is reality, of their dominance as a leading company leading us into this age of AI computing, which we can debate. Competitors will debate. Other companies, AI startups want to pick at, but the reality is they are the behemoth in this space right now, absorbing north of 80% of the dollars, but also tremendous amounts of shipments in uh,
Yeah,
in AI specific data center implementations. They are also the 80%. So
yeah,
again, you're totally right, right, in terms of its how to value, etc. Growth. It sounds like they've still got good headroom for growth, but it's actually it's a really fun debate because I was actually having some conversation with somebody the other day, an investor, on a topic we touched on a bit briefly, on whether or not how Nvidia is like Cisco, right? And so you look at past booms and sort of say, okay, this is what happened the past boom, and then it kind of faded. Can we draw any parallels? What's interesting though, and I made this point that we've only had in this scenario with the technology industry a couple of boom examples. So it's kind of like just because that happened that time doesn't necessarily mean the exact same thing's going to happen this time. It's more mature of an industry. Everybody's actually learned more lessons. And so I'm not sure I love those sort of similar parallels because a lot did change. Times changed. The industry grew. It's bigger than it was back then, right? And so it's a more mature industry. So I say all that to say we can, speculate all we want. What is this, a hype cycle? How big's the bubble? There's definitely elements of that will come into play that are repeatable, but I'm not sure it's a apples to apples comparison time and time again that these exact same dynamics will happen.
Yeah, I think that's a good point. You mentioned we could debate lots of the metrics around it, and I just want to remind listeners we actually did back in episode, I think it was episode 61, where we gave 10 things I hate about Nvidia, like just looking at all the what the short case, what the problems, what the flaws could be with them. None of them are manifest yet, and we said that in the call, but in that episode. But to your point, like that has been a really common topic I've heard in sort of investing channels, comparing it to Cisco. That comparison comes up a lot, and I agree. I think it's kind of deeply flawed. I we There's definitely bubble like elements of this AI boom right now, lots of them, and but just saying, "Oh, this is 1999 all over again," is probably not the most. It's not a useful heuristic because is it 1999 or is it 2001? Because or is it 1998? And like that you still make a lot of money whatever year you pick on that. So there's a lot of differences here. Um, but I think the Nvidia story itself is very different than what Cisco is offering, and there's a lot more going on. I mean, the whole market has changed. To your point, the whole market has changed. The whole way we build technology and compute has changed so dramatically since then.
Yep. Yep. So I say that just to add, and I do. I mean, how old would you say the technology industry is really, like 40-ish years? I don't know, right? At best, right? You could even shorten it if you just say compute that's been mainstream, but that's not that old. Yes,
Oh,
there was lessons there, but it's really still a pretty young industry, and I think that's again why 100% agree. Like, know our history; it's going to make us wiser going forward. But we should also know, like, culture, time, and technology is embedded today. It was not 20 years ago, so 10 years ago. So those are, I think we just got to keep that in mind, right? For the discussion, to be intellectually honest with ourselves
yes,
before we
and
draw absolute parallels.
yeah, and I think there's probably even a simpler lesson to look at is just Nvidia's own stock price over its 40 years as a public company. They've had, I think, 3 or 4 instances in which they've had annual drawdowns of 50%.
Hmm.
So uh, that could happen here again.
It could, it could. Uh, the, the I think one of the more interesting lessons of history, though, was that as great as it was to be a gaming company, selling a couple million GPUs a year was just not the greatest. They were the dominant, only real viable scale player, but that was not giant volumes. And one market, right?
Yes, yes, fair point. I would say though that there are structural things built into the way that Nvidia conducts its business that make it vulnerable to big swings.
Mm,
Right?
mm,
We all know semiconductors are cyclical.
yep.
Nvidia does more than sell semiconductors; it also sells complete systems, and so that means it has a much bigger working capital pool of inventory, a much longer tail. It's much further out on that whiplash tail, and so things like when they have to write down stuff, they have a lot more to write down. Is really what it comes down to. And so if and when there's an AI downturn, sorry, when there's an AI downturn, it's coming. Don't know
It's
when it's
coming.
coming.
It's coming.
They're going to have to write down a lot more than say an Intel or an AMD would because they have figurative warehouses full of servers that will go
Yes.
on.
Yeah. Okay. So that's a good transition to the next pillar of this discussion that I want to talk about, because I see this a specific way, and I'm totally fine if you disagree and or if listeners want to disagree with me. And I'm making a point about my observation of Nvidia relative to what you just said, which is how do we become sustainable, not be susceptible to some of the market dynamics that Jensen knows full well. So I'm calling this the Nvidia strategy of the platformization of GPUs. And I say this because whenever you look through, and I've been reading a host of um, reports and interviews with developers who write for CUDA, just discussing why it is what it is, why it's hard to write for other platforms when it comes to AI software, the architectural compatibility that they get, some of the very very good things for developers that exist within CUDA. And so you see all of this, but then it always keeps coming back to these are all GPU workloads. And NVIDIA's kind of platform strategy, right? They want to say we're a platform, meaning we make silicon products, we provide software, and so we're not just a chip company, right? That's been their belief and their positioning for many years. And within that, yes, we would agree that the platform is kind of the whole unit, really the whole AI server that NVIDIA wants to sell, which is memory, networking, the host CPU for some applications, but still largely the GPU, right? Even with NVIDIA's systems, let's just say 85-90% of those workloads still run on the GPU. So when we say platform, we're still talking about GPU as a platform, because right now that's their biggest investment. That's their architectural changes. They're really building their whole solution from CPU to memory networking to be the GPU is the center of this. So the platformization of GPU is really their strategy. Now, I say that because that is a unique strategy to NVIDIA. Other companies, let's just say AMD, Intel, even the way the hyperscalers are approaching this, like their workloads, when you say how are you going to run your cloud workloads or your AI workloads, it's really a diversity. Of course, it's on maybe an ARM CPU or an x86 CPU, a GPU, an accelerator, etc. Right? So there's a much more balanced process that other companies take to their workloads that NVIDIA does not take. Now, that doesn't mean NVIDIA doesn't make an accelerator someday, beef up the CPU, the ARM CPU that they use to run more inferencing workloads. Totally possible in the future. But for right now, their platform strategy feels very very GPU centric. And I don't know if that's good. I don't know if that's bad. I know it's one of their strongest differentiators. I'm just making the point that's where we are right now from their strategic approach and differentiation in the market. It's just very GPU centric.
So I frame it very differently than that because, for one, I think of Intel and AMD as CPU companies, right? And I know AMD's gotten a little more diversified, but Intel's moving the other way. Like they're pairing off everything that's not a CPU because they need the cash, and so they're spinning off Altera and Mobileye and networking, right? They're becoming much more CPU dependent, and I would argue that most of their history, CPUs are all that would really matter. That's what really drove results was the fabs and
Yes, that's
the
true.
CPUs that
Yep.
came out of it. So
Yep.
is NVIDIA's approach any different than that? It's just GPUs versus CPUs. That's the basis of it. And so if it worked for Intel for 20 years, maybe GPUs can work for NVIDIA for the next 20 years, whatever number.
Can we quote you on that, Jay? We quote you on your 20 years. It's 20 years of life, of
The
growth.
stock is going to keep going up like this for 20 years, and it's just the whole economy is going to be NVIDIA.
This is not stock advice, everyone. Just so you know, we don't give financial or stock.
Yeah,
There you go.
yeah.
Caveat.
Don't take stock advice from us for lots of reasons. Um, so but my point is, like, we're going from a world of CPUs dominating the data center to GPUs dominating the data center.
Yeah.
But the other thing too that I think really makes Nvidia different is that is like I was saying a second ago, is they sell systems, right? They sell systems, and this goes back to the beginning. They didn't sell GPUs; they sold graphics cards or
Yeah.
both.
Right.
And now they don't just sell GPUs; they sell servers. They sell complete, fully built out, fully kitted out DGX and MGX, or I'm getting all the acronyms confused. HGX. They're at that level. They're a systems company, and I think that's how they think about the business, is as a system sale. And
Mm-hmm.
I think what's really been interesting in the last few years is how they've looked to expand that.
Mm-hmm.
right? And I've talked about this a few times. I've done a lot of work lately on how data centers are getting built and down to the nuts and bolts of it. And Nvidia brings a really different approach because they're also selling or not selling, they're giving away plans for entire data center design. Right? Here's the whole thing. Here's the whole roadmap, all the specs. Here's how you lay everything out. Um, and that's Intel did a little bit of that, but like this is much further along. You get an Intel reference design in the past, it would be a board for a server. You can get a reference design from Nvidia today for the entire data center, including cooling and firmware and electrical, like the whole thing. And
Mm-hmm.
uh, they have, I would argue, a pretty broad array of assets to bring to bear there, like at the system level, right? Because they have the GPUs, they have the servers, they have the networking, and they have the CPU too. And I actually looked back in my archives 2 years ago, sort of early 2022, February, March 22. I wrote a piece about Nvidia and the data centers right after their analyst day, and I was like, hey, they look pretty compelling in the data center because they have everything, right? They have CPU, they have GPU, they have networking, right? They don't have and they resell memory too, and they mark it up pretty nicely, so they have everything you need for the data center. And that's the investment advice you should have taken. Like March of 2022, you should have bought a bunch of Nvidia stock. Um,
Uh,
and it's so that's and I think that's like you add all that up. It's a to me it is a very compelling proposition for GPU centric data centers. So the question now is like, how many GPU focused data centers do we need? And this gets us to the conversation about inference, right? Where are we going to run all this inference? Is it going to be on GPUs? Is it going to be on Nvidia GPUs? No, not when they cost $30,000 a pop, right?
yeah. Yeah.
So
And so the two questions really comes down to, um, well, and I'll frame this before I make my point for the other tier of the conversation we want to get to. But there's two markets. There's the hyperscaler market, which right now is roughly 75 to 80% of the data center market, and as obviously growing as TAM expansion happens there. And then there's the tier two, tier three CSPs who are sort of your just bare bones co-location, bare metal facilities that just rent hardware, right? Rent GPUs, rent CPUs. It's just straight infrastructure as a service, no software on top, unless you're DigitalOcean, which is an interesting side spin of that conversation. But so you have these two markets. So I guess my first question and why I raise this point about the platformization of GPUs is, one, is that what the biggest market, meaning the hyperscalers, want, right? Because you feel them trying to take inference away from I'm sorry, training away from GPUs with TPU, with inferentia. Microsoft doesn't quite have that yet, but they inevitably would, right? So you can see them saying, "I want those workloads." So I say that just to say I don't know if that's the world that the hyperscalers want. Now, you could probably make a much stronger case that that's the world that the tier two and beyond cloud service providers want. I don't know, but I think those are going to be much more turnkey, um, controlled in a much more vertical, simple solution. Buy from one vendor, have the whole thing, kind of a thing. But that's why I think this is interesting. Is that does their bet on GPUs, like assuming again that they're not going to have a diversity of cores that's whatnot, is their bet that it's a GPU centric platform somewhat counter to what the hyperscalers want? Again, I don't know if we know the answer. I'm just That's why makes this interesting to me as a thought experiment.
yeah, so I get where you're going. I'm going to push back a little bit on the premise though, because I think one of the big developments that's taking place right now because of AI and is absolutely being spearheaded by NVIDIA itself is the extent to which the data center demand is shifting away from being only about the hyperscalers,
Mm-hmm.
right? For the last 10 years, hyperscalers were 50-60% of all data center construction spend in the category, right? I think that shifted. That has this year, next year, and I don't know beyond that. their share is much lower, and we're
Mm,
seeing there are now a few dozen of these uh, alternative data centers. Jensen likes to call them AI factories, whatever neo data centers, alt data centers, whatever you want to call them. But they're not run by the hyperscalers. They're run by mostly private companies
right,
or sovereigns,
right,
and I think they're a big chunk of that spend. I think wouldn't be surprised if this year the hyperscalers are less than 50% of the category. Um, I think I think it's probably 40%, and that delta is all going to these new up and coming types. And those companies don't just want GPUs; they want Nvidia GPUs.
that's right.
They're the ones who are taking those Nvidia off the shelf designs and just putting them into the ground. The hyperscalers do not want that. The
Mm,
hyperscalers are going to build their own for their own reasons, partly because they have their own design imperatives, their own software they need to factor into, but also because they're not going to become 100% dependent on Nvidia. Uh, if they have any, to the extent that they have any say in it, they're absolutely going to fight tooth and claw to avoid that. So they don't want that complete Nvidia stack. Some of them, Amazon will have to take some of it because that's what
yeah,
their customers want.
right,
But Google is not.
right.
Google has a very impressive lineup for TPUs. They're they're at the point now where they're segmenting their products, so they have
Yep,
different types of TPUs for different. Then they have their own legitimate training solution.
yep.
So they're not going down that path. So yeah, the hyperscalers don't want Nvidia, but a lot of the rest of the market does. And so
Yeah,
if I'm a Fortune 5,000 company outside of tech, I'm just gonna go wherever I can get the Nvidia instances I need. I'm not gonna mess around with anything else.
yeah. So I think that's an important distinction, right? As we split this market, which is why I did it the way that we did. And I will say though, the counter to my point is that if Nvidia can continue to out innovate the hyperscalers at their own game of building custom training accelerators and do it better for cheaper, for less power, whatever. I don't know if they can, but if they can do that, they can stay competitive. And I think that's what I'm reading into when Jensen says, I'm well aware that my competitors are coming after me, and it's what keeps me up at night and hyper focused on continued innovation because I know they want, they want that space. And I think when he's saying competitors, he means those doing custom because that was a couple of the context of the questions that was given to him was everybody's making their own custom stuff. So
Yeah.
he knows his customers also compete, and that's that point. But I think you're totally right because I think the upside thesis here, which is also for a lot of other companies that make inference products, accelerate products, your AI accelerator startups, etc., is predicated on the rest of the market because that's not going to hyperscalers. So you need these tier two, tier three CSPs to keep growing, build new buildings, maybe startups that do that. You need the sovereign factory, sovereign AI, like I said. That's the rest of the TAM that's available for all of these companies where the hyperscalers inevitably go more vertical, um, and just eat up a ton of the market for themselves. So that's why I think this is interesting because I know you and I have talked about this. I've been trying to figure out what the actual size of that market is and how is it growing. So not just the hyperscalers growing the TAM, but these new CSPs, hardware as a service, infrastructure as a service, like what's their TAM growing to? Very little people have estimated that yet. But that's what's interesting to me because that shapes the market for kind of all these other people who are really well positioned to sell into that market.
Yeah, so there are a few sides to that because right, what we're really talking about is, I think, is enterprise, is large enterprises, right? Because data centers right now are going to be the hyperscalers. They're going to be these AI factories. The hyperscalers are going to do their path. The CSPs are going to go down their path with their own internal silicon and some Nvidia. The AI factories are going to go 100% Nvidia, right? And let's not forget Nvidia is a big investor and financer for a lot of them. And so then that leaves the broad enterprise market, the long tail enterprise market, and that's a mix of colo and on prem, big companies looking to do their own compute for a variety of reasons. And I think it's going to be really hard for new entrants to get in there because you're dealing with a level of customer who, just by definition, this is not they don't have
Right.
deep technical expertise.
Right.
And they don't really care whether it's Nvidia or some startup. To them, like they have no reason to, they have no strategic way to really change the market. They don't really care. And so their own preference is just going to be to do what's easiest. And that's going to be Nvidia because that's what most of the software stack is now trained on. And so who among those, like what big bank is going to go out and say, oh, I'm going to take a big flying bet on some startup when you have to retrain your software layer and re-optimize it. Like, just I don't like, there's some that will try it, but it's very hard to build a sustainable revenue based on that. AMD could probably do well there because they already have the relationships, but like for everyone else, it's just too complicated. It's I don't want to say nothing, but it's going to be it's really challenging. I know a bunch of startups that are going down that path, and like it's just it's very challenging. It's very
Yeah.
expensive.
Yeah.
So I
But
wish I could be
to
more
my point,
optimistic. I wish I could be more optimistic about it, but
ag- agreed. But to my point, if they had any chance, that would be it, because the hyperscalers aren't going to buy from these semiconductor startups for their data centers.
yeah, I mean the history of semiconductor startups over the last 10 years is littered with
Yeah.
the
Right.
corpses of really promising technical startups that had great products that were just
Yeah.
left out in the cold by the hyperscalers. I'm
Yeah.
trying to think of a friendly metaphor that doesn't get us an explicit rating. It's hard to settle the hyperscalers. That's my point.
Very, very hard. Um, yeah, I agree with the sentiment there that those new colos, bare metal, simplicity wins, and it's better to go with one vendor than many, which is why I think Nvidia is strong, really really strong there. The other thing that has started to come up recently that I think is actually really interesting to think through from a semiconductor standpoint is, I've been reading a number of CIO reports on software spends for public cloud workflows, and most of them are actually increasing their investment in multi-cloud, meaning that they are diversifying their workloads across clouds, and that does not, um, that includes some tier two CSPs as well as on premise. So for security workloads, right, they're bringing those closer in house. So there is the uh, the interesting dynamic of, you think through your software, you think through your enterprise workloads, and you might actually be moving to a market that's very heterogeneous. And so what does that look like then, right? In terms of, you're going to run it on somebody's, my point is, there needs to be some level of compatibility, architectural and technology compatibility across those, for these companies to want to run their their cloud workflows in one, two, three, maybe even four, right, different cloud companies.
Yeah. So multi-cloud is. I can't think of the right metaphor. I know that CIOs all like to say they want to be multi-cloud. Are they really in practice though? When it comes time to actually put those multi-cloud practices in place, there are real limitations.
Yeah.
And I think the way that we need to think about it here on our show about semiconductors and hardware is most of that multi-cloud strategy will get realized at higher layers. Will get realized at the database layer, the software layer,
Mm.
right? If you want to be multi-cloud, what that probably means is you're gonna go with like Databricks or Snowflake or one of those companies where you're sort of deploying your data across multiple clouds through that layer. And if you're making a decision at that layer, you probably are not you're not a company that's going to be decided like the way you're going to go
Yeah.
multi-cloud is to do it at the software layer, not at the
Right.
silicon layer. I think the companies that will try to be diversified at the silicon layer are the hyperscalers who know how to move workloads around chips and have that deeper technical expertise. Um, but for them, that heterogeneity is going to be their own chip versus Nvidia versus x86. Like that's how they're going to play that up.
Yeah. Yeah, you're right. And to your in practice point, I mean, the answer is yes, but only with kind of your top 50 largest companies that might deploy on two clouds, but not necessarily more. Other than that, a lot of people are not, right? And that's I think the interesting dynamic because there's always been a debate that there's true value in taking a multi-cloud approach. I get all of the reasons why people have argued that this is a good thing, and you're right. If there's an abstraction layer, at a software level or a database level that basically can handle those workflows across clouds, that's great. Um, but I do wonder for that to continue to be, again, if they're going to say my security workloads or my customer support workloads, things that have to be very private, I keep those close to my chest. I run those on prem, and then I run email and something else right in the cloud. So again, these are new conversations because obviously more and more is moving to the public cloud. There's that's not the vast majority of their workloads today, but this thought process, adding some of this artificial intelligence workloads to it, to say I'm going to be very selective or intentional about where I put these, seems to be in the conversation, whether or not it lands there or not. And I just think that's interesting because there are component implications of managing, right, a workload that goes across a variety of variants of silicon.
Yeah, I think I mean it's interesting because there is this growing chorus of people who are recognizing that the public cloud is expensive, right?
Very.
And the margins. I mean, Amazon gets pretty good margins from AWS, and so if I'm a company that's looking to move to the public cloud, you'd think that those companies would sit there and recognize that and try and do the trade off and say, no, maybe we'll just keep this stuff on prem. But my sense and all the data certainly points that we're still seeing a big migration to the public cloud. And so
Yes.
I wonder how many of those conversations about, oh, I want to be multi-cloud, I need to, or I want to have stuff, I want to keep stuff closer to on-prem, and I'm going to rethink what I'm sending to the public cloud. I wonder how many of those conversations would just go away if there was a real price war between Azure and AWS, and we just saw
Sure.
prices come down. Because I think
Sure.
that more than anything else is the imperative.
Yeah.
Um,
Yeah. I mean, again, I know this scales by range of customers, but I've talked to a few people that are handling fairly basic workloads. These are not gigantic companies either. Email, etc. on Azure costing 10, 15, $20 million a year. And
mhm,
like, dude, just for that workflow,
right.
that's what that's costing you. Like, it's nuts. So I agree with you. And I think that could change. It's super interesting that, like I said, this discussion's happening, fresh debates in what they spend and how they move their workloads, and AI is. In fact, I saw this other very interesting report that was really insinuating that Gen AI is actually slowing down corporate software spends as people in are starting to really evaluate where they're going to put these, and so they're just not making some of these decisions yet. So there's been a very specific decrease in revenues from a lot of software companies because of that, which I think is just interesting because it's basically causing this fresh conversation, which is a whole stack conversation. I think that's the point I'm trying to make. It's not just a, well, I just take my software and I stick it here. Like, I do think there's component parts of these decisions that are coming into play that maybe didn't before, which I think is interesting.
Yeah, and I think sort of bringing this back to AI, what we're seeing is there was this frenzy for the last 2 years where everyone's trying to figure out what their AI strategy is. Big non-technical corporates trying to figure out what their AI strategy is. And I think what's happening is people are coming down on to the conclusion, at least for where generative AI is right now, there are things that companies want to do with Gen AI in their software stack. They're trying to figure out where the right place to put that is. And what we've gone from sort of like everything is everyone's hair is on fire trying to figure it out. We're starting to realize what the strategy is and where these things will work best and how we save 5% off of service or 7% on our customer support workflows,
Right.
whatever that is.
Right.
Which then means I think those things are going to start getting put in place more diligently, go into production in the next year or two. Which brings us back to the question of inference. I think we how are companies going to build out their inference for these Gen AI services? And I think that matters a lot because this is, I think at least a fair amount of the Nvidia story is based on the assumption that some people have that their dominance in training and the first mover advantage in AI will translate into something similar
Yeah.
in inference. And I that is not guaranteed.
Agreed.
Um, right. And I think that to me is a really one of the critical questions around NVIDIA is how much inference can they get? And I think what they're going to have to do is come out with either an accelerator or a very cheap inference chip. And I think they're in a really good position to do this. I don't know exactly what the strategy is, but they could come up, they could architect something really influence tuned that could be pretty interesting. Um,
Yeah. Agreed.
but then
Agreed.
you look at Apple with like they're we're going to do Apple Intelligence on laptop CPUs. Never mind AMD GPUs or whatever accelerator. We're just going to use our own internal CPUs because we have all the allocation we need from TSMC. We have a really good price on
Right.
these, and
Right.
the TCO calculations, like yeah, it's one it's a it's 1/8 or 1/100th of a GPU performance, but it costs us 1/200th. So
Yeah.
TCO works out this way.
Yeah. The other interesting thing, just to go back to this Apple point, even though we talked about this at length last week, is they released some new software that essentially lets you string together any Apple devices in tandem, hosts of them, and share those compute resources. And people were actually showing training, very small models, mind you, but across a Mac and iPad and a couple of iPhones using the GPUs and running inference across it. And so I say that just to say they do make good GPUs. I know they're client based GPUs. Um, but they now have this software layer that lets you just string together as many Apple products as you want, regardless of operating system, and share that compute load across a network for a task. So wherever that goes, but they can do that.
So here's my I'm going to pitch you an idea. Here's our startup idea. Let's buy a bunch of those Mac Minis and like build a data center with it for super low cost training.
Yeah.
I'll
Well,
bet you the math on that pans out. You can probably train a decent sized model on one of those
there
cheap.
is a company called Mac Studio that is a basically racks of Macs, and they always
Yeah.
move to M2 and then M3, and so anyway, super interesting on that. Anyway, and that was the tangent. So as we wrap up, any last what's the last word? We'll call this an end segment I give to Jay. Any last words?
Yeah, the big question for me for all of this just remains and demand. Like what are we going to do with all this AI capability? We're spending, $100 billion on data centers this year, something like that. I don't know, probably more. Same thing next year. All this investment going into AI data centers. What are we going to do with them? That's where all this comes down to. And I'm, you have to be a techno optimist. You have to just be a plain old optimist to assume some of these business models pan out.
You do. You do. I mean, I think there's really low hanging fruit. I mean, the simple answer, and while this is an Apple point, is just we're going to make Genmojis, Jay. You're going to see the most randomest of things, like we talked about last week. Me and Bigfoot, right, walking side by side in the woods, is a Genmoji coming to Jay's iPhone. Um, but you look at some of the coding stuff. It's hard to predict where this goes. But like, if somebody hasn't played with the new Sonnet model from Claude, we've actually been using it to code some Python scripts that we're using for some basic workload benchmarks. Shocking how good it works. You
Oh,
instantly
good.
come across your rate limit, even as a paid customer, but it's amazing. Like stuff that saves you ridiculous. So there's a lot of that goes into this, and I say that again to say there's a ton of compute there at AWS, and then we're running up against rate limits, having it help us code day one. Like, and I launched this week, and so it's just we're figuring that out. But there will be some things. I don't know if it requires all of that data center, but it's just shocking to me how we still find the limits very quickly with brand new gigantic models that come out.
It's a fair point. There's a lot more to. I'm not saying there's nothing out there, but we need more, and I think it's coming, but I don't know that.
Yeah. All right. Well, thank you very much, everyone, for listening. We appreciate our readers' comments. You have reached out to us on Twitter. We get emails from friendlies who know us. Please keep that up. We love the conversation. We appreciate your time greatly, and we will talk to you all next week.
Thank you, everybody. Tell your friends. Click like and subscribe and all that.